Hello everyone and welcome back. My name is Greg Furman, market analyst here at TraderPlanet.com, and these are the market positions for January the 5th, 2012. Now again, we've had a bit of a choppy day today in the markets, but not too bad, fairly quiet. Now what I'm looking at here is the gold trade. Now looking at this gold trade, depending on what you're in, you can trade it by way of ETF. This is the actual gold futures contracts. Some of the international clients of mine, they trade it by way of CFDs, contracts for difference. Also an excellent way to trade it. Now, what we can surmise here is we have an oversold condition, and gold is in a corrective phase, in my respectful opinion. That's all this is. We're not starting a new trend higher. I think that's very unlikely. I think we are going to move slightly higher, and I think that that's a very good selling opportunity. Now I have this trend line drawn right across that is pointing to the 1700 mark. Stop should be above that area, so you should gauge this trade accordingly. Because we do have an oversold condition, but much like the US dollar last year went into an oversold condition, and it continued to move substantially lower. So what we're looking for here is a corrective move higher. This shows it on a 6-month time frame, pretty much a steady decline. The highs are much lower and the lows are getting lower. So we're going to go in here now and we're going to look at the daily report from Vantage Point and see what we have. Now again, we're only looking at this particular stage to see, there is a potential long trade here, but what we're really looking to do is sell into strength. Now for tomorrow, we have our range is going to be 1621 and 1598. So for tomorrow, we're going to be looking for a move to 1621, and we're going to enter into a short position. We're going to enter into a smaller position because we have to have a wider stop here. Now, if the gold trade to the downside begins to accelerate, we could easily push back down towards that 1500 mark. Now, the key thing I want to point out here, what I've said to my own clients repeatedly, is that the issues from 2011 have not been resolved. We have a European summit coming up again this month. We have more issues coming out of the Eurozone and a potential global slowdown. So nothing has really changed in the first day or two of new trading to warrant gold to go flying higher, or oil or equities or any of these things. So what we're looking at again is for this to settle in. We might push up a little bit higher, maybe between 1650 and 1700 is possible, but I tend to think not. I think that we're going to get a little bit of a move up here. For tomorrow, probably 1621 should contain the market, and we're going to use that again to set short positions. Now that's our first position for tomorrow. Now our second position is going to be in the Forex market, specifically the US-Canadian pair. Now again, I'm going to back this out so I can show everybody this trend line that I talked about in the Forex weekly outlook. This is, in my opinion, one of the lowest percentage trades. Our indicators and everything early in the year are telling us that we're going lower, but this would be classified as what's called selling a break. That usually means buying resistance or selling support. We can see this trend line coming in here. Our indicators are starting to get a little bit oversold. We've had very little volume in the market for basically the last 3 weeks. And again, selling right at this level, even though our indicators are telling us we've technically broke this wedge formation, selling a break like this is a very, very low win percentage trade, because again, our technical indicators and technical systems around the planet have been missing one key component for essentially the last 2 to 4 weeks, and that's volume. So without volume, you get false prices. So with that said, again, we're going to keep things simple here, and we're going to be looking at the key levels. I anticipate a retest of this 102.16 area at the very least, which is the Vantage Point key resistance right now. Now, if we go into our daily report from Vantage Point, we're relying pretty heavily on this right now. For tomorrow's range, we have 1.0076 and 101.77. That's our play for tomorrow. Neural index is down second day in a row. But what I'm doing is looking back at price action prior to Christmas and the Christmas break, and the US CAD was getting ready for a fairly substantial move up. And regardless of some of the fundamentals that support the Canadian economy, it's still a risk-based currency. We cannot lose sight of that. So for tomorrow, we're going to stay with the fact that looking at 2011, risk clearly off. So I don't think that anything magical has taken place in 2012, in the second trading day of 2012, that would support risk being back on in any substantial way. With that said, that points towards longs on US Canada. And again, I understand that the indicators are pointing lower here, but again, selling a break or buying a break at the top is such a low percentage. And it's very, very important that we respect that this early in the season. So we're going to stay with that. We're going to be looking for a very minor retracement down to about the 1.0080 level, and we're going to use that to enter a long position. So with that said, these are the market positions for January the 5th, 2012. And again, my name is Greg Furman, market analyst here at TraderPlanet.com.